Good morning, everyone. My name is Maria, and I handle the corporate relations of TPI POLENE group. Thank you for joining us in this meeting, and please do not hesitate to interrupt the presentation and ask your questions, or you can wait after the presentation for the questions. I'm flexible on this arrangement. So this is regarding the first quarter of 2025 performance. But before that, I would like to highlight two things. One is that on the SEC ESG rating, TPI POLENE has AA ranking for 2024 rating for 2024 and achieved 5 stars rating on the corporate governance. Just as I mentioned, TPI POLENE Power has AAA rating and also 5 stars rating on corporate governance. AAA is the highest rating possible. So this presentation is divided into two topics. Group background and then a review on 2025 first quarter performance. And that will be including the initiatives, the operating performance, the segment highlights, and sustainability strides. This is our portfolio of assets, and most of our investments are geared towards sustainability. I would like to go through this briefly because many of you may not know us very well. We have 4 cement lines totaling 10.8 million tons capacity in terms of clinker. In terms of actual cement, this is a changing number because, as you know, we are moving towards what we call green cement, and the clinker content on those cement types vary. We are in a single location in Saraburi, and we are the youngest cement plant in the country, coming in only in the 90s, whereas the other two were much older than us, 1930 and 1970. We also have 4 mortar plants, and we stand as the largest producer of mortar. Mortar is a premixed cement. Sorry about that, a little bit of a glitch. So as I said, we are the largest mortar producer, and we also have the widest product range, and our network is very strong in the provincial area where predictably mortar is used. We also have a ready-mix concrete. All cement manufacturers have actually ready-mix concrete. We have concrete roof tiles. We have fiber cement. For the fiber cement, we have a new product which received a patent from the US, and this is a very good product to substitute wood, and it's fire retardant. It's pest resistant, and it also does not absorb moisture, so it has longer longevity as product goes. Then we have specialty polymers. This is the remaining business from the TPI petrochemical complex circuit that went to PTT Group eventually post-crisis. So we managed to hang on to the LDPE and EVA business, and this is the main component of our specialty polymer. We also have a nitrate business under the chemical division, and this is for blasting limestone mining and other quarry mining. And we also produce nitric acid, which is a high-end cleaning agent for gadgets. And then we have solar sheets, production of films and sheets for solar panels. Then we have energy and utilities. Currently, we have 440 megawatt of combination of coal, the municipal solid waste or garbage, and waste heat recovery from the cement clinker. Our 150 megawatt pole is under conversion now, and it's almost finished. It's about 60 to 70% complete, and we hope that by the end of 2026 we can stake the claim that we are totally green. The conversion of coal to MSW it would be the first one in the region and perhaps globally. So hopefully, if we are successful, we can sort of contribute towards conversions of coal power plants in the region, helping them to gain sustainability credits and also really helping reduce the use of coal. This is new, a solar farm. We just started it late last year and completed this year, and we now have 69 megawatt on an AC basis. We are aiming for this round 89 megawatt, and we are having this in our plant location in Saraburi, where we have a lot of vacant lands at the moment. If the government signs the P2P or private to private arrangement, we can scale up our solar farm capacity because we still have land. Well, we have a solar roof. This is 5 megawatt. I will amend the presentation later. And on TPI POLENE Power, we also sit on 15,000 rai of land, strategically located in the country, but majority, the biggest portion is in the south, the area where we wanted to build a futuristic industrial estate, but that is still currently under several stages of government permits. Now, to feed input to our power plants, we use household waste. In the process of extracting the calorific value out of the household waste, we get a lot of biochemical compounds from the garbage. And this is the segment that feed into our what we call food safety and food security related business. So we get bioorganic fertilizer, we even get probiotic and symbiotics for livestock farming and aquaculture. So, and this also led us to expand into what we call wellness and healthcare products. So for now, we use about 9,000 to 10,000 tons of MSW per day. And we extract a lot of bioorganic compounds from that. And we only use a small fraction of that because the market is still very much related or used to using the chemical fertilizer and pesticides. So there is a culture of using chemical, and that is mostly imported. But this segment of using bioorganics is growing, and we hope we can ride the market. We definitely have the capacity to scale up, but this is still a quite small business for us. So our initiatives, we are moving towards green cement and green building products. We are moving towards specialty polymers. So we typically are positioned in the HVA, but we are going higher, even higher on the SBA, just to help preserve profitability, insulating us somewhat from the very volatile nature of petrochem polymer prices these days. We are, as I mentioned recently, the bioorganic products, food safety and food security is also a push. And this year, we add on green energy and power, which is the solar. And then we continue with our cost efficiency via plant retrofitting. So these are our product highlights. Here are the green cement certified. And every bag carries a carbon credit of how much is the carbon saved. So it will make it easy for the users to quantify their own carbon footprint with their activities. And this currently account for over 70% of total segment sales. And then we have what I said, the one that received a patent. This is a fiberboard that is a very good replacement of the wood, which I think something that could find market in countries like US, Japan, and maybe even Australia. So we are introducing this product, and we hope to be able to bring it to the US market. That's currently under conversation. This one is an innovative specialty polymer. What we produce is a kind of film that you can put in between glass panels and can obstruct the radiation coming in to the room. So it's for windows. It's architectural application. And this one can reduce the room temperature, can maintain, has higher aesthetic value compared to what is currently in use for the market. And it can also last longer. So we hope that this will click with the manufacturers of glass windows and walls for those aiming to sell to developments that identify themselves as green buildings. We launched this in Germany late of third quarter last year, and we are starting to see some interest. And this is an area of potential growth for us if we can convince the glass manufacturers that EVA-based specialty polymer can do the job very well. And these are the product portfolio for our bioorganics. And we welcome interest from overseas, especially for countries that are trying to go into regenerative farming. And this is seeing volume growth, but 30% year on year, but really is still very small part of our business. So this is our solar capacity. We have 69 megawatt AC bases, and it used 700 rai of our land. We still have significant land available. And so we are hoping that the P2P program can actually be approved, and then we can sell directly to potential customers. As of now, this capacity that we are installing is used by TPI POLENE. So it's TPI POLENE Power running the operations, and TPI POLENE is the off-taker. With this capacity, our take up from the national grid is coming down, and we probably can be nearly self-reliant when the capacity are all installed. The reason why we say nearly self-reliant is because solar works only at certain times of the day, and we still have to figure out the very good battery storage business. We also converted the roofs of our production facilities into solar, and this reduced our electricity consumption significantly. Same thing, not only in production facilities, but also in our DC distribution centers. We have done the conversion. And here is MSW as AFR in calciner. The reason I mention this here is because we already told investors that we are converting some of the coal into MSW in our calciners. That project is already completed. We used the German technology for the conversion. And so what happened is that TPI POLENE Power is the one who produces the garbage and RDF coming from the garbage and sell it to mother company TPI POLENE. Because we have logistics trucks, distribution trucks and distribution vehicles like van and so on, we have installed EV chargers in our petrol station. You know that we have something like 10 or 13 petrol stations that are strategically located for our logistics need for fuel. So we are converting that to EV partially for now. As we complete our conversion of our logistic trucks and vehicles to EV, then we would be increasing the charging stations as well. The result of this is the significant reduction in the diesel consumption, both in our mining and also in our distribution. So it's a good thing. We become more insulated from the diesel prices. The operating performance in the first quarter was underpinned by these factors. The kilns, which were most of them were in maintenance, came back online. Only one was left under maintenance and is completed now. The RDF to coal ratio increased significantly. Two reasons. One is that the maintenance was actually a factor for the decline in RDF in the previous quarters, but also because as we run the operations, kiln operations, normal basis, we can pump in, we can control the temperature better, and so we can manage the RDF input into the calciner better. Clinker export, which was not present last year, resumed this year, started in late February, and the volume is normalizing. So if you track us, our normal volumes is about 2.5 to 3 million tons a year. So we hope that we can go back to like really normal. What is the reason why we are back in the export? It is because the price have improved as dumping from China and primarily Vietnam and a little of China has reduced significantly. So it's a good thing for us. It improves our utilization rate, drives the growth of clinker, and also reduce our unit fixed cost. As mentioned before, the conversion of the 150 megawatt coal project is almost complete. And if we are successful, this would be a good template for others to follow. And then we have the solar farm, we have the solar roof, and then the petrol station. So these were the underpinnings of the first quarter performance. So how did we do in the first quarter? In terms of sales, we grow 6%. In terms of profit, we grow 22%. Our costs increased only 1%. And the rise in gross profit, strong increase in gross profit relative to sales is a characteristic that you can find in high operating leverage business model. So this is high operating leverage kicking in a positive way this year. If you note last year, this high operating leverage was also the main drag for our operation. Now, the thing to feature here is a tax expense. Tax expense increased significantly. The reason for this is our tax loss carry forward has already matured. You are only allowed to carry it for 5 years. And in some cases, we did not utilize all because they are attached to specific businesses, and we did not use all. So some of them have to be written back. That's why you can see a 200 million baht tax expense in the first quarter, whereas last year it was only 75. This is the maturing tax loss carry forward is going to be with us for another 2 to 3 years. But the good news is that because our performance have recovered, then we would be able to use tax loss carry forward. So hopefully, going forward, our tax expense will be reduced. Unfortunately, I cannot guide you what would be the effective tax rate because the timeline of the maturation of the tax loss carry forward is not uniform. And also the businesses that's doing well, while many of our products are doing well, we cannot really determine which one has got tax loss carry forward and how much. So cannot guide you on the effective tax rate, unfortunately. Now, another thing to feature is our foreign exchange gains. The reason why we have so much last year is because we sat on a significant amount of dollar assets, but that's disappeared this year. What did we do with that assets? We use it to finance our capex, one, and secondly, we use the asset to repay our short-term loans, the bill of exchange. So the dollar asset now is not a lot as last year. So we think that for this year, FX loss and gains won't be a big conversation issue for the company. Even with the lower, with a higher tax expense and lower FX, the profit of the group rose 6%. Right? And then if we go to the cash proxies, the EBITDA, because we count FX as part of EBITDA, increased by 3%. But if you remove the FX element, the EBITDA increased by 21%, consistent with the high operating leverage nature of the business. So sales growth driven by good demand. Power volumes were also higher year on year because throughput was improved. Specialty chemicals revenues improved also. Those are the highlights for the first quarter. On the margin side, as I indicated, right, we got cost savings, higher plant efficiency, and maintenance shutdown completing. For the power, it's cost efficiency and savings. For the specialty polymer, it's lower from last year, but we have improved from fourth quarter because of it's okay. We improve from the fourth quarter because of better spread. It's okay. When we switch into a better margin product. So overall, the gross profit margin rose to 26% from 22% of last year. And the EBITDA margin improved to 27%. No, I want the page to move. Sorry. So in terms of just a brief review on how is the segment participation changing. As you can see here, you will see that back in 2022, the specialty chemicals had a big contribution in the revenue, accounting for 35%. And it also had a very big contribution on the EBITDA, which is 48%. But in 2023, down to 2024, the revenue contribution of specialty chemicals have already come down to what is close to the historical norm. And in terms of EBITDA contribution, the contribution of specialty chemical is already back to the historic norm. So the spread has collapsed significantly for this particular product. Now the building material improved a lot, because I mentioned to you earlier on, because of many factors driving the improvement. But the good thing, the feature that I would like to highlight in this case is the power. You can see our power contributing over 50% of revenues. But in terms of EBIT, and in EBITDA, it's also a very significant contributor, accounting for 52% in the first quarter of this year. However, I would like to remind everyone that the other from our power plants are expired already. The last one matured in beginning of April. So going forward, this contribution, depending on how the building materials perform, may change. But the change will be temporary, we would like to say, because we have also rolled out several projects that will come in and help us regain the EBITDA level before the expiry of the third adder. That you give us about a year and a half to recover that amount. Just signaling in case you want to do a projection. So in the first quarter, power was 21% of sales and 52% of the group EBITDA. So asset by segment, because as you can see, our leverage has been increasing over the recent years. The reason for that is because we have a lot of investments that are to bring us closer to our sustainability goals. So asset in the constant for the first quarter was down 9% compared to the end of the year. Two reasons. One really is the reclassification of the nitrate assets into chemical division. The power company increased asset, and this is gonna be the one that is ongoing. You would know in our previous guidance that there is still some 4 billion baht spending needed on this particular segment as we convert the 150 megawatt and we also expand on green power capacity. So asset deployed in the first quarter was 2.2 billion, and close to 1 billion of that is in TPI POLENE power. The rest is in the construction materials and specialty polymer. The energy and utilities assets growing 1% captures already most of the solar and also the completion of TG8. If we annualize the first quarter EBITDA, it would give us a 6% return on asset, improving from 5% in 2024. Our leverage position, you can see our gross debt rising because of these ESG-related investments. But in the first quarter, our gross debt has come down. We repaid the bills of exchange and also some of the long-term debt. And then on a net debt basis, net IBD, it's also down, whereas our equity is marginally higher. In terms of ratio, we are in the first quarter, we are at 7 times net debt to EBITDA, and we are slightly above 1 times on the net debt to equity. Our internal target is 1. So we will work on this, and we hope that as the year unfolds and the recovery in the building products continues, we can bring these ratios lower. Our average cost of funds is around 4%, but our refinancing undertaken this year is below 4%. So maybe there will be a marginal reduction in the cost of funds as the year unfolds. Our last credit rating is A-, but Trace downgraded our outlook to negative in beginning of the year. So I would like to talk to you about how we are going as an enterprise. You can see here, the company has actually evolved progressively in terms of sales generation. We base ourselves from 2010. We peaked at $1.5 billion sales. And between these two time periods, we increased our sales generating capacity by 105%. In terms of profitability, the improvement was more dramatic. From the 2010 to the peak of 2022, which was $385 million out of 1.5 billion revenues. The generating ability was 253% better. So the whole group has evolved progressively, and that this probably is going to continue, as you will see in the next slide. This is how we are in terms of long cycle margin. So this is the characteristic of the group EBITDA with the FX, and the volatility was really very evident in 2024. But as I mentioned earlier, our cash assets is no longer that high, so FX wouldn't be a factor in the performance. But when you look at, here is the long-term margin look, and you can see that in the period covered, our EBITDA margin was 18.3%. But during the low cycle years, which a lot of people probably associate TPI POLENE, you can see that the average margin was only 11%. But now, since 2019, up until the first quarter, the average margin is 24.5%. And earlier on, I mentioned that the EBITDA margin was closer to 30, right, for the first quarter. So you can see that the ability of the company to generate EBITDA margins has actually improved. And this is thanks to the investments we have done in plant efficiency, cost-cutting measures, conversion of fuel, and many more that help us to reduce our costs. And these investments are made to bring us closer to our sustainability target. And we hope to achieve carbon neutrality in 2043 for TPI POLENE, and in 2037 for TPI POLENE Power. So quickly on the segment highlight, building materials, why it improved? The reason is very simple. It's in here. The government's capex spending has come back to normal. Normal being back to the 2022-2023 rate of spending. And as you can see, the gap from last year to this year is quite significant. And this is what drove to the improvement of the domestic cement and building materials demand. Because of the better demand, we were able to reduce the discounts starting March, and this will result in a better price and better margin for the product. The discount was very, very deep last year when demand was very, very weak. So we hope that this year will remain better than last year. And if you want to see what could be the scale of the potential expenditure, last year the budget release was delayed. And so even though they have high budget for capex, they were only able to spend 55% of that. So this year, the budget was normal. And if they can spend it as per allocation, then we could see an increase, a dramatic increase of budget spending, about 110% year-on-year basis. And you can see in the agencies that has a lot of construction activities, the potential increase of spending from there could be from 40% to close to 300%. So this will be the driver for the demand of cement and construction materials. And as you know, government is a very big part of the total demand. The other segments, the residential, still very soft, but the commercial has actually improved in first quarter. And we think that it will continue, but the growth will not be significant. As for the residential, it's probably going to stay soft for many reasons, which is macro in characteristic. So power, as I mentioned, has been quite a solid supporter of the revenue and EBITDA of the group. And this is how it goes. We are close to the peak. In here, our utilization rate was about 60%. So we continue to work towards that. But because of the retrofitting, modification of TG8, generally our operations will be a bit weaker. But we improve on the other power plants. Specialty polymer, well, it's going to be a struggle for the polymers in general. As you can see, as indicated in this producer manufacturing index, the trend has really weakened. US in particular, which was touching the break-even line. The tipping point is back to negative and below the tipping point now. And with the tariff and all, it's question mark on where is the PMI gonna be. No, with the tariff and all, plus sending all the migrants back to their countries, that will affect production. So we don't know what that means later on in the numbers. So only China is above the tipping point, but you can also see the trend is not solid. So it depends now. So you can see here the proxy HDP and NAFTA below the line, significantly below the trend, and this is the indicated spread 300. This is below conversion cost. So I think with this scenario for the polymer, commissioning of new capacities will be delayed because there's no point in making bad situation worse. But the not so good news is because the tariff, when the situation turns difficult, we turn towards the intra-ASEAN trade in the export. But the tariff is also going to affect the ASEAN countries. And you can see here that IMF has revised down the GDP growth targets. And Thailand, which is our domestic market, is most hit with a downgrade of about 40%. And so it's going to be a struggle for the petrochemical. The only good thing for us is that, so this is the outlook of, so you can see here, there is a positive slope in the downstream operating rates in China. This is both for the footwear and for the PV solar panels. But that is now in hindsight, that is mostly of inventory stocking ahead of the tariffs. So production was probably very high, and now it's coming down, and it's coming down very fast. And this is China. In India, you can see the footwear industry, the organized, being resilient, stable, but the unorganized segment has come down in terms of operating rates, which tells you that overall orders, production of footwear in India has declined, and orders probably from the overseas also declined. And the unorganized footwear is your arbitrage in the industry. because this is more or less driven by long-term supply contract. So you look at this unorganized footwear, the trend here, and that gives you a better picture of what is the situation in India. India and China are the biggest customer for the EVA, for the manufacturing of general, footwear and other products. So what could we do, and then what did we do? You will see here in the fourth quarter, in the first quarter of this year, our LDPE ratio increased. In the past presentations, we said that strategically we would like LDPE to be below 10%, but that was not the case later last year and also this year. So EVA, LDPE is 23%, and our EVA is 16%, coming down in terms of ratio. But our EVA++, which included the new product that I described to you earlier, has also improved in terms of contribution. And this is what we mean when we say we are nimble, because we can switch around products depending on where the margin or the spread is better. Because of that, we managed to stabilize the polymer cash flow generation, even though the spread is still quite questionable using the proxy numbers, the industry numbers. So we will remain on this path. But why can we do this and the other cannot? It is because we are quite small. We are medium-sized for EVA capacities, and so we can move back and forth different product categories depending on where the margin is. That kind of flexibility is not available to larger plant capacities. It's very difficult to do. So in a sense, that gives us an edge. But admitting that overall, it's very difficult to fight the trend. But elsewhere, things are okay. Coal is still on the going down, and the gas price is showing some uptick. So let's hope it will continue. Okay, lastly, in terms of guidance, I would like to highlight that based on our CAPEX program, this will be the year where CAPEX is high, and we go off-ramp in 2026. And even for the power. So this is based on our program right now. This does not include possibility of new initiatives. Okay, so once we get to this low capex cycle, we can begin deleveraging, and we hope we can go back to net debt to EBITDA below 6 times by 2026. So here is our sustainability plan, our pathway on how to get to carbon neutrality, 2043 for TPI POLENE and 2037 for TPI POLENE power. And these are just our ASG merits and ASG strides for those that also track the companies on their ESG activities. Right now, we are sitting on 2 million, slightly over 2 million ton equivalent of carbon credits that are TVER certified. And so this we can sell if there is a good offer. And then we also have 2.9 or 3 million units of renewable energy certificates. Also, so for now, we do not do anything about this because we are waiting for the carbon market to open here in Thailand. But we are okay, we are ready to accept offers if any.